Hey traders, today is Tuesday, December 9th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick update on the US dollar. We are in the first day of a two-day meeting with the Fed with all eyes on tomorrow's Fed rate decision. Now, we're already fully priced in for a 25 basis point cut. DXY is seeing a little bit of a bounce here. Here's a multi-time frame look. The weekly chart, we had been highlighting 100 spot 15 to about 45 zone. That's the 2024 low week close and the 2024 low. And it converged on downtrend resistance here. We got the reaction last month. That whipped down. Now we're seeing initial support here at the basic 38.2 retracement of the advance off the yearly low. That's basically 98.79, 98.80. So we're seeing a little bit of a rebound here with this advance breaking the near-term descending channel. I'll show you the daily chart in a moment. Focus is, this is still key resistance. For us to be able to mount a secondary attack or to mark resumption of that advance that we saw off the September low, we would need a weekly close this week northbound of 100 spot 41, 100 spot 45, that 2024 low week close. The daily chart looks like this. Okay, we broke that September uptrend, and here's the drop. We've already executed a decline of more than 1.6% off the highs, with the weekly and monthly opening range now taking shape right above support. So this leaves us with a potential range break opportunity. Drilling down even deeper, here's what it looks like on the 4-hour chart. There's the breakout we saw yesterday, okay? It takes us back above near-term channel resistance off of last month's late high and really sets the stage for tomorrow's rate decision. Initial resistance is at the 38.2 retracement of the decline. You have the 200-day moving average, and then you also have the objective December open. That all comes in right around 99.39, 99.49, so a 10 pip zone of resistance. Again, you've got your monthly opening range taking shape now, and your weekly opening range taking shape now, right above support. If the dollar is going to see a kick higher or we're going to see a rebound, losses would need to be limited by 98.68, and you would need to see a confirmed daily close northbound of 99.49 to suggest that a near-term low is in place and the potential for a larger recovery, right? Subsequent resistance is right at the 618 retracement. That gives you 99.77. Losses below 98.69, 98.68 on a daily close basis would threaten another bout of accelerated losses. There's really nothing on tap until you get into the 98 handle near those October lows we made late last month. And then the next key zone of support is all the way down at 97.81. That's the 618 retracement off the advance, and the 2018 high gives you 97.71. So the levels are really well mapped out heading into the FOMC. The interest and the focus will certainly be on that updated SEP, right? The summary of economic projections. We saw that the last time around back in September, we saw them increase their growth prospects, slightly improve the employment outlook, while at the same time upticking the perception or the expectation that inflation might rear its head a little bit further in 2026. Look at these numbers tomorrow. The focus will be on what they do with the inflationary outlook. The employment data has been a little softer than expected, but even on the last couple of reads, it's been pretty decent. So the highly anticipated interest rate dot plot will always be central focus. Keep in mind that the focus again here will be on R star, the longer running or terminal rate. We know that the distribution has been widening out and there's deep dissension amongst the committee members with regards to the outlook or the path for monetary policy heading to 2026. So that's going to be the focus. But for the dollar, it's really going to be whether we can hold this near-term support and mount any kind of defense or offense rather on the back of this release. We'll keep you updated as always on X at MB4X. Best of luck trading, and we'll see you tomorrow. Cheers.